Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Let's start on Exhibit C. Not too much change from last week. As we'll see, the price of oil is holding in the mid-60s. That is based on Iran. And the question is, what will the United States policy be? Apparently, we have moved about a third of all the military airplanes we have in the world into position, not just the two aircraft carriers, but plenty of land-based planes. I suppose that fleet of planes plus whatever Israel's Air Force, I suppose what we could do is try to chase down every missile launcher in Iran and try to destroy them before they got off missiles. And maybe that's the plan. The Iranians apparently are proposing that we turn it into, or the United States and Iran turns it into a big commercial deal where U.S. companies are allowed back into Iran. Iran's airline buys Boeing planes, so on and so forth. So it's really kind of poised on a knife edge. I think if the Revolutionary Guards, which have a military force that's bigger than the Iranian army, and have naval facilities as well. It's kind of speedboats, that maybe large speedboats, but it's nothing more than what you think of as about 100-foot speedboat. But they are equipped with missiles and whatnot. And they've closed off part of the Hormuz Strait in order to do anti-ship missile practice. So it's really fairly tense now, and you see it in the price of oil. I think sometime by next Wednesday or the Wednesday after, we'll get a resolution here. And I mean, the U.S. will either go and try to take out every array. There are about 200 apparently missile launchers in Iran, and they're dispersed, hard to find. So Iran will fire off a lot of missiles before we get them all, if that's the plan. So we'll see what happens. Turn to Exhibit B. As of last Thursday, the near-month price had gotten to 65. There's still a fair amount of backwardation in the market. 27 was 61. That's all good. I mean, the macro situation is holding the price of oil up more than if we just had the oversupply the market's been dealing with. In terms of natural gas prices, they've been relatively disappointing given the winter we've had, which is the best winter for electricity demand or gas demand that we've seen any time in the recent past. Natural gas pricing is barely holding, and the future is barely holding $4. So that's a little alarming. The other alarming thing is that the increases you can see from the second table on Exhibit B has been in the Permian, and the Permian hub price, Waha, has been trading in negative territory right through all the cold weather. So that is a bit alarming. Now, that will improve, or the futures market says it'll improve, because you have 5 Bs of additional pipeline capacity. But query what happens if those pipelines open up starting in the second half of this year, and the Waha price goes up. Where will Houston Ship Channel and Henry Hub be with that 5 Bs of additional gas coming from the Permian? So natural gas is a little uncomfortable now as an investor, I would say, given the winter we've had. Exhibit A, nothing really to report here. 2 aircraft carriers out there and all this military hardware. The president continues to say that he wants a defense budget way higher than the $900 billion that we've been running. If you look at Exhibit A, it's been around $900 billion, for 24, 25. and estimated for the fiscal year we're in. I don't think the United States can do anything other than get its deficit down. I think we're long past any theory that, that we can just continue to borrow money. And if there is a push to spend more than $900 billion, it's going to have to come out of somewhere. And it's hard to imagine that there'll be a tax increase. So I don't think it comes from there. As GNP goes up, and GNP growth has been pretty good. It was apparently 2.5% last year. It's likely to be 2.5% real growth this year. So the amounts coming from income tax and payroll tax and corporate income tax and whatnot will continue to go up. And then you have some tariff revenue, maybe 200 or 300 billion of tariff revenue. So revenue keeps going up. I think the trick will be into getting the deficit down is to try to hold most categories pretty flat. And Social Security, that's pretty programmed, as you can see. I mean, just reading the numbers off from the last 4 years, 1.35 trillion, 1.45 trillion, 1.57 trillion, 1.65 trillion. I mean, that's just going to march up. Where the progress is being made by the Trump administration, to their credit, is on federal spending for healthcare. Medicare's, I think, showing signs of being, a little bit flat, and Medicaid, which gets a lot of criticism, has been flat. So if they can hold healthcare spending flat, and of course, interest is going up enormously as the debt's going up, and the average interest rate on the debt that is around 3.5%. What the Treasury Secretary is keeping everything short. And as the Fed funds rate comes down, that'll help maybe flatten out interest. But it's hard to see that there will be room to substantially increase the defense budget. Trump is nominated, and presumably the Senate will confirm Kevin Warsh as the new chairman of the Federal Reserve. He is very outspoken on the idea that the Fed balance sheet, which got as high as 9 trillion before 0809, it was like $1 trillion, that it's now down to 6 or 6.5 now. It needs to come down to a much lower number. So while we may have shorter rates lower because the Fed fund rate will be lower because inflation seems to be getting down closer to that 2% range that everyone thinks is the perfect level for inflation. Hard to imagine that the long bond market, or 10 years and out, won't have some impact by the Fed going into QT, or quantitative tightening. In other words, letting the balance sheet run off. But that is our macro picture. I think as investors in equities primarily, I think this is a fairly solid situation. But it will be, it's a good plan. Now it just needs to be executed on. I think with all the news, we've got to talk disruption. Whether you're a close follower of the stock market or just news in general, the language models, or the apps that come off the language models, have caused all kinds of disruption, especially people thinking that software is challenged by the Anthropic apps. And I think we spent the, going through impact of China, and then we did our predictions and whatnot. But I think first topic today ought to be who gets disrupted by these apps coming off the language models, and who benefits. So I know we've got to reserve at least 10 minutes at the end for healthcare, but Mike, Jason, who wants to take on the disruption situation?
I'll start. I'll try to summarize what my perception of what the market thinks is happening right now. It is very obvious that the cost to write code per line of code has gone down dramatically and is approaching zero. I've heard reports of people saying that they've got employees that are now able to produce, with the assistance of AI, 1 million lines of code per month. Lines of code is not a good metric for for such. Jason's over here shaking his head. Not a good metric for software. So that being said, that is a big change. The cost per some metric of software production has gone way down. Second thing that's happened is the previous generation of software, a large portion of the actual work was developing a user interface. And that user interface was important because people like you and I would need to go in and use the software on a day-to-day basis. And small advancements in the user interface would make my work, and then you scale that across many people's work more efficient. Today, a chat interface or an agent acting autonomously doesn't need a fancy graphical UI. So there's a big chunk of the industry that is maybe less relevant than what it was before. Now, here's where the market is somewhat lost. I think there's a complete misunderstanding of what a software company actually is. And Jason and I have some experience with this, having at least attempted to build some software companies. One of the things we learned early on is that you're supposed to hire 2 salespeople per engineer in a enterprise software company. And when you go into building one of these companies with a product idea, you think, okay, I just need lots of engineers. We're going to build the product and it's going to sell it itself. And the reality couldn't be farther from that. The reality is you need people that are able to sell in order to get a product to market. And that 2-to-1 ratio of hiring is sort of what's expected at an early stage startup. So even that R&D line that you see in a large company like Salesforce often has very non-technical people that are a part of that. So all that is to say, I think you need to think of a software company as not just ones and zeros that are produced autonomously by agents nowadays, but as an organization that delivers value to other people or organizations. And using that framework, you can kind of decide whether there's a future for said software product.
Yeah, I have a question. Let me just interject before Jason. The largest and most successful software company in the world is Microsoft. Microsoft, large part of their business is based on their Office suite and using those products. As I understand, people who use Microsoft, Excel and other Office products on a per seat basis, to the extent that people fall in love with Anthropic's apps, or Claude apps, or whatever apps, is it possible that they'll begin their workflow and whatnot that their use of Microsoft Office products will be modified, limited, reduced, because they find themselves using Anthropic products or OpenAI products or Jason it just seems to me there's a vulnerability here that we didn't even imagine 6 months ago.
Jason and I both have something to say here, but very quickly, for Microsoft Office, the value in Microsoft Office is not that you can type words on your keyboard and it shows up in a document on a screen. It's not that you can type numbers into Excel and do math. That is very trivial. The reason there's value to the Microsoft Office suite is because there's a network effect in that I can create a spreadsheet on my computer and send it to Jason, and Jason can do stuff with it too. Then the question is going forward in the future, are we going to, is a network effect like that, is that valuable or not? And there is a case for yes, it is, and there's a case for no, it isn't. And that could be debated.
Yeah.
Jason, the floor is yours.
The case for yes, it is if Mike sends me a spreadsheet, I'm going to want to see how the calculations are performed. I might come to figures differently. I want to know how the sausage is made. We send this memo out, though, and there's a trust level there, and we expect the numbers to be correct. And there's no calculations beyond the PDF in this 20-page memo. So the trust is that we're doing that correctly. And I think we could get there with AI, and then this moat around file formats breaks down, because I can send this file in any file format and have my language model convert it into any other format that I like. So there's other text documents formats, and right now they all kind of are interoperable because they've built that into Word and the other ones and Max Pages. But it can be converted into anything on the fly, and I think that's where that moat breaks down. Is if as long as there's a spec on how that file was created, published somewhere on the internet, the language model is going to be able to translate that.
Now, let me give the counter argument. And I think this is playing out with some companies like Adobe right now. You know, we don't have a position in Adobe or anything, so this isn't like a strong opinion particularly, but for professional use cases, I like Adobe as an example because they have very high-end products that are increasingly less useful for many users. If you want to create an image, you can type it into, as Jason and I were just doing before this, typing it into ChatGPT, and it'll create an image, a view, a caricature, or whatever. You can create graphics. You can use it for advertising. You can use it for whatever. So the power tools, like what Adobe offers, are still very valuable to professional users. If you're going to, make a movie, for example, you still want people that are skilled in using these tools. So I don't think they ever actually totally go away, but maybe the percentage, maybe the number of people that use them could decline. But remember that these companies do have pricing power as well. So I wouldn't be surprised to see the per seat licenses for stuff that is likely to stick around, like the Adobe products and the Microsoft Office suite, to go up substantially over time.
Yeah, we've got to switch to healthcare pretty soon, but just to review page one, these numbers are through September, but when they get updated, and remember, they're not forecast numbers. There's kind of this is what Apple was doing or Amazon was doing as of the third quarter of the year. It's not trailing, it's not forecast, but with the capital spending projected for these companies, not Apple. Apple's sitting the Capex cycle out, but Amazon, Alphabet, Microsoft announced huge, and plus Meta, plus Oracle, huge capital spending budget. What people look at that and they say, how can this not be a bubble? I personally think that what has happened is those 5 companies providing data center services have a great deal of demand, not for training, but for inference. And I think the inference demand is because the apps are really catching on and being used widely. And as they're used widely, it's a risk to Microsoft, it's a risk to Adobe. To turn to page 2, it's a risk for Salesforce, for ServiceNow, for Snowflake. I'm not saying that there isn't, these businesses are not going to go to zero. They generally are underlevered. They don't have too much debt, but these language models, whatever we want to call it, AI, which are now roughly 3 years old, if we go back to the introduction of the chat, are all of a sudden, well, remember there's a saying that I think Andreessen came up with, the software is eating the world. It looks to me like AI is eating software. And more on this next week because we want to reserve enough time for healthcare. But
we have to use Jason's favorite saying on software. It's that when AI actually works, we just call it software.
That's exactly right. right from the introduction of the chat model, when Mike and I would say to Jason, "What in the world's going on here?" Jason would say, "Oh, wait a minute, it's just software." So that is very true.
I guess if I could take a minute, I would just say that most enterprise SaaS software products are a data storage platform. So you're collecting data from somewhere, you're storing it in an intelligent manner so that it can be easily, cheaply, quickly retrieved. you're doing some analysis on it, and then you're presenting it to your users. And I think the data is not going to cease to exist. It's not going to go and live inside of a language model either. And I think the only thing we're replacing is that visualization layer that the user is interacting with. And I don't think SaaS goes away. I think these agents all become users of these platforms because they're all going to need to access this data that is still being collected.
And it'll be a fight on those platforms as to whether to keep it in-house or keep it closed to models only that they allow you to use, like Salesforce.
Right. So I think the business models have to evolve, and that's definitely some uncertainty, and that could be priced into the market.
But as Hunt said, all of these companies are subject to disruption risk because a new player can come in with a new product architecture and potentially provide the same or similar thing at a significantly lower price.
Right. Well, their cost to develop that product is going to
right. But still to market it, to support it, and do all of the other things aren't necessarily cheaper. So in software and technology, we typically look for 10x improvements in order to actually have a chance at making a difference. And, the rest of that stuff is non-trivial work.
I've got one question for Jason that's going to take up some of our allotted 10 minutes to healthcare, but what in the world is Tesla going to do? Tesla's trading for, about $1.4 trillion now. Their car sales are more or less flat. They do have a strong balance sheet. They do have some free cash flow, but isn't that an awful lot of valuation on either robotaxis where they seem to be slow off the mark and they're still just doing tests in Austin? It seems as though Waymo's in like 6 or 7 different cities and Tesla's lagging behind, or a future where we have a lot of humanoid robots. How do we get to $1.4 trillion for Tesla?
It's a good question. Have we talked about our Tesla trip?
Maybe not.
Mike and I had a meeting in LA. So it's roughly a 2-hour drive from downtown San Diego where our office is. We rented a Tesla with full self-driving, and we had it take us there. And we didn't touch the wheel at all. We were in a parking spot. You plug in where you want to go, and it drove through city streets, highways at high speed, highways in standstill traffic, city streets in LA, parked us, and we were there. The only thing it could not do was take us through a drive-through of a coffee shop. So
even that, it sort of just hesitated, and I took over because I didn't want the people behind to be
irritated.
Yeah. But I mean, parallel parking on a busy street was impressive. Like that, it was really, really quite impressive.
So the technology if it's not there, it's extremely close. And now it's a regulatory hurdle for robotaxis. So I think the value of Tesla is entirely in robotaxis at this point. Now, is it worth $1.5 trillion? If you start doing the math their goal is to do 25 cents a mile robotaxi service. If you replace a good chunk of the miles driven, I don't know the math off the top of my head, but I did it a couple weeks ago. But it's going to be, you have to replace a large percentage of miles driven with robotaxi for it to start adding up. But it could certainly get there.
And you would need, the other piece to think about is like, will trips increase? Because it's cheaper essentially to go from A to B. On that note, the first Cybercab came off the line this week.
Oh.
Yeah, production. Yeah.
Didn't see that.
Well, we got to get to healthcare. So since we're talking about how to justify the value of Tesla at $1.5 trillion, why don't we tackle page 19 and Eli Lilly, which is the first healthcare company to get their equity value up over $1 trillion. Now, I kind of see Lilly. I mean, we there's the weight loss drugs, but also a very successful business. I mean, $62 billion of revenues, $16 billion of free cash flow. not quite as impressive as NVIDIA, which brings half its revenues down to free cash flow, but nonetheless very impressive. But trading at 60 times free cash flow. Jason, how you more comfortable defending the Lilly valuation than the Tesla valuation, or where do you stand?
I think so at this point. So Lilly has the market-leading weight loss drug, and they have a new version coming out, and it's going to have a long patent life. They have the leading Alzheimer's therapy as of today, and it's going to have a long patent life. And their most recent earnings were great, but the standout thing to me was that a third of all their prescriptions, their weight loss prescriptions, were through their direct-to-customer platform. So they're skipping the middleman and selling directly and probably capturing a larger percentage of profit by doing so. So it's encouraging that platform is doing so well.
And that's a good bridge to the PBM discussion.
Yeah. So
our favorite topic.
Yeah.
Last week, a bill was introduced by Elizabeth Warren and Josh Hawley, kind of modeled, they say that it was modeled on Glass-Steagall. The attempt is to break up essentially the PBMs. They call them the large vertically integrated insurers. And the idea is that no one company can own an insurance business and or a PBM or pharmacy. And essentially it breaks up the big three PBMs. And I think that's really what needs to happen at this point.
One of the interesting things about that bill is that it was proposed by a Republican and a Democrat. And at least from Elizabeth Warren's perspective, we know that she's fairly squarely in the pocket of big pharma. So this actually makes a lot of sense for big pharma, because when they avoid the PBM, they actually capture more of the profits from a drug. So this is one of those few times when I can be on the same side as Elizabeth Warren.
Yeah, you have to remember the PBM on average is capturing 50% of the drug's cost.
Right.
So even though the pharmaceutical companies have very high profit margins in many cases, that is based on only half of the drug's cost. Another bill that was introduced, it was in a House committee, it passed through a House committee, is a proposal to authorize Medicare to reimburse for multi-cancer early detection tests starting in 2028. That would be, I think it would be a good advancement. So these are blood tests. Grail is the only one on the market now. But these are blood tests that look for DNA shed by a tumor in your body that's circulating in your bloodstream. So they're looking for a needle in a haystack, essentially, very small concentrations of cancerous DNA that is in your blood. And the idea is they can detect it at a very early stage, possibly before you have symptoms, before it can be imaged. And the idea is you treat it earlier, which is you have better outcomes. It's cheaper to do. It's probably a good thing. It's where we think, part of where the future of oncology is going.
Right. How about the Vertex pain medicine? Still about the same situation where it's not clear how much good it does, but on the other hand, it's not an opioid? Or am I oversimplifying that assessment?
I wouldn't say it's not clear on its efficacy. It's proving to be effective. It just lies somewhere between, the high dose Tylenol and opioids. And Vertex discussed two studies that they conducted. One of them was among plastic surgeons, where they saw 90% of patients remained opioid-free that would have otherwise been prescribed an opioid following some sort of cosmetic procedure. That's a very good result. The other one was in arthroscopic knee and shoulder surgeries. 76% of patients remained opioid-free versus less than half that were attempting to take non-opioid pain medicines. So it definitely has an improvement on you being able to avoid an opioid for acute pain. But if the pain's strong enough, you're still going to need an opioid.
Probably be a first-line product in a lot of areas.
and the opioid would be the rescue medicine. In a lot of countries, they don't prescribe opioids for all the reasons we see in the U.S., where opioid addiction is a huge problem, and you have a lot of people turning to other forms, heroin, fentanyl, and that when they get addicted and can no longer get a prescription.
In other countries, they're just expected to deal with it.
Yeah. So they wrote 550 prescriptions last year. They're expecting that number to triple this year. I'm wondering if that's not being a little conservative. We do know that awareness just in general of the drug is pretty low. So we've talked to a lot of physician friends we have, and an overall awareness among them was kind of shockingly low. So they have work to do to get the message out.
There's another Vertex update too.
Yeah. So we know that their model with CF treatments is to keep innovating and out innovate everyone else. So there's been a number of therapies though that have a different approach to treating CF. So they're inhaled mRNA therapies. So the idea is you're putting instructions into the lungs on how to create a properly formed a version of the CFTR protein that doesn't misfold, essentially. In the last couple months, we've seen two of those trials, two companies developing those cancel their programs because of disappointing data, essentially, out of some of their earlier studies. So I don't know if it's that the delivery mechanism didn't work, they didn't discuss it too much, or if they just didn't see results that could even match up to Vertex's.
Right. Any Harrow update?
Harrow update. So the big thing that's been going on with them is they received coverage on the CVS PBM formulary. So that's where PBM news is good news to us, I guess.
Yeah.
We can play both sides of this.
So that's a big development for them. It's now the number one prescribed therapy for dry eye disease through CVS. So if you're prescribed a drug for that at CVS, in CVS's system, that's the drug they're going to be prescribing. We haven't seen any reliable data yet on prescription data. We've seen some from a couple of sources, and it doesn't fully cover all the prescriptions. But the data, right. The early data looks really, really good for prescription data.
Good. The Lantheus, who we're very upset with, just kind of losing market share. Has there been any kind of positive news at Lantheus?
Well, I don't know if we discussed, but they had a management shakeup a while back that we sold some of our position, but we didn't exit it, and they have replaced the CEO and brought back the CEO that was originally there when we made the investment decision. So they have a couple of positive things going for them. The thesis still exists. I think they just mismanaged pricing of the drug. So it seems like they've changed course, hopefully corrected that situation, and we're waiting to see what the data says.
Right. I know they're not making much progress with their new medicines, but on page 15, I'm always so impressed with BioNTech because they've hung on to their cash pile. I just lots of discipline there, and contrast with Moderna. Now maybe Moderna will turn out to be more successful developing new drugs, but they both had cash piles from their COVID vaccines, and the cash pile is still at BioNTech, and at Moderna it's about 2/3 gone.
Yeah, the president of Moderna said something really interesting in an interview. So the FDA declined to review their new flu vaccine application. Following that, they had a review meeting, which is kind of typical. And then I believe it was just today that they announced that they are going to accept the submission and review the data. But while all this was going on, the president of Moderna said that they're going to consider canceling their viral vaccine program because you can't turn a profit without selling the vaccine in the U.S. Now, the U.S. is 4% of the global population, and if you can't turn a profit selling a product to the other 96% of people on Earth, that's pretty telling of how much we are subsidizing development in the life sciences.
Right. We've done our healthcare, and we'll see you all in 7 days' time. And in the meantime, everyone be well and stay healthy. Take care. Thanks for listening.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to and no reliance should be placed on the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future and may or may not hold positions in the securities mentioned.